everybody, Mark Pruitt here with Strategic Money Tips. Hope this video finds you well. Here with Mr. Stephen Shaw, who is now a brand new homeowner. So why don't you tell us about that? You just sold what? Sold and bought a home?
Right, yeah. So not our first home, but back in right around Thanksgiving, we had a good opportunity to take advantage of a good house, much bigger house. But we put our house on the market, the one we currently owned. Sold it within a few weeks. Actually, the first weekend we put it on the market, it listed and gave us a cash offer. So
great.
Things moved very quickly, and we closed on the sale of the house on Monday of the first week of January, and then closed on the purchase that Friday. So
in the middle of all of that, basically, once you got in the middle of that, you had COVID.
That's right. Yeah, there was some COVID in our family, but fortunately, there was never anything more than a mild case for any of us at any given time. So it was right around that week of Christmas, and kind of crazy, but nobody got hospitalized or really even needed treatment. So it was a mild case comparatively.
Good. Well, I know in the meantime, you've been very, very busy pulling out wood and carpet and tearing out walls and rewiring things and replumbing things and all types of stuff. So for those of you that don't know, Stephen is very, very handy. So if you need a handy guy, he's the one you want to call. That is absolutely for sure.
Not really.
But in the middle of all of that, you brought up something the other day to me that I thought would be interesting as a strategic money tip. And that is, you said you begin to get some mail, and it reminded me because I've gotten the same mail, and I know everybody else, if they have purchased a house or they're refinancing a house, they get this same type of mail. And so why don't you talk to them briefly about that, what you uncovered and what you've seen?
Right. So, if you've refinanced recently or purchased a home recently, within the next 90 days, probably from the time you close, you get tons of stuff in the mail regarding mortgage protection insurance.
For sure.
The thing that gets me, Mark, is the envelope they come in is so stinking tricky. It makes it look like it's an official letter from the mortgage company themselves.
Because they actually rebrand it. The insurance companies will actually rebrand some of that advertising and make it look like it's coming from the mortgage company.
Right, to get you to open it, right? Because you don't want to miss something that's important for a new lender or new loan. And then you look at it and you're like, that's just another mortgage protection thing.
Right. And so there's different types of mortgage protection that they do. One of them, as an example, I believe is just pure insurance. You can just get pure straight old insurance, which is a term policy. So maybe explain how that works as far as your home.
Right. And also we probably need to make the distinction. This is not PMI insurance. It's not insurance for your mortgage that a lender will require you to have if you don't have at least 20% equity. So that's PMI. That's packaged into the loan itself.
Correct.
And the payment. So we're not talking about that. What we're talking about is the advertisements that come related to you have a new debt.
Right.
Which
is your mortgage.
That's right, the mortgage. And then if the appeal is if you die, this insurance will kick in and pay off that mortgage for you.
Correct.
Or for the survivor.
But there's different ways that it pays off.
That's right. Yeah, so some is just straight, and you won't know this until you probably call or somebody calls you and you go down the rabbit hole, but some of the policies are just term insurance. All they're doing is an insurance company is matching the death benefit to the mortgage. Now, how do they know how much you've borrowed?
Because it's listed.
It's all public information, right? They comb through the court records on an ongoing basis, and they know what you financed because they know the deed of trust. They know all that public information. So then they just match the death benefit to your mortgage amount, and then they hit you up with a sales guy that wants to sell you a term policy.
And so some of those term policies, like you're talking about there, literally pay the full amount. So as an example, if you had a $250,000 mortgage and you kept it and you paid it down and you owed $50,000 left, and then good Lord took you home and you passed away, it would still pay the $250 because it's a pure term. As long as you're alive during that term, it will pay out the full amount.
Right.
But that's a normal term. You can actually get that anywhere.
You really
have to
can.
get it from them. You could get it from another insurance agent and potentially shop it and pay less money.
That's right. Now, one of the distinctions because there was a kind of a lifetime ago for me, there was a small stint in my career up in Missouri where I actually would follow up on the leads that I got from these letters. So that's why I know how they work. And when I was doing that, we would basically present it as, here's your mortgage. You can get a term policy. If you have a 30-year mortgage, you can get a 30-year term. Sometimes you're limited to age, so if older lenders wanted to get a 30-year term, probably can't always happen.
Harder to do, right?
But that would be the idea as you match it. Now, in any time in that, even though your mortgage goes down over those 30 years, if you pass away, just like you said, the death benefit is the full amount in that situation. They can be cheaper, though, if you go through underwriting. One of the appeals to these envelopes and some of the letters that you'll read is it's easy to qualify for, or no underwriting required, that type of thing. Well, that might be helpful for some people that would not be able to qualify, but they pay for it.
They're going to pay more premium.
Substantially more.
Just because of the ease of qualifying, not having to go through any blood test or doctor records or anything like that. So they're going to pay a premium for the convenience of that. Whereas they could pay less money and get the same benefit.
That's right.
And in some cases today, there are actually companies out there that are not doing 30 years. They're actually doing as much as 40-year terms. So keep that in mind if you're looking for that.
Yeah, unbelievable.
Another one, though, that I think is interesting, that I always found interesting, they'll have different names for it, but here's the gist of it. What it does is this. You're paying for a premium if you own a $250,000 mortgage, as an example, and you have paid your mortgage all the way down to where you only owe $50,000 left.
Right.
You die, it doesn't pay the $250,000. It only pays
what's left.
Only pays what's left. So you've paid a premium all this time for as if it were $250,000, but it pays it all. Though if you've got all your mortgage paid down and you only owe $50,000 left, it's only going to pay what is remaining on the mortgage.
Right.
And so that's not the one I would ever recommend, simply because you're paying extra money, and if your mortgage is down to zero, then it goes away.
That's
basically.
Right. Yeah.
If you're going to pay that kind of money, pay something with the benefit that will go out to the very end, or at least to the full term. That's always better for the clients.
Right. And when we talk about level term, I always like to remind people that it's not that they are committing to the insurance company a 20-year or 30-year commitment. It's just that the insurance company is committing to you, the policy owner, that they're not going to change the rate for that term.
And so how would they get rid of a term policy if their house is paid off or they decide they don't want it anymore? What's the beauty of having the term policy?
It's easy. Just stop paying the premium.
It's real simple. They'll just cancel it. They may send you a notice or two. After that, you're done. So you can always stop paying with the term. So keep those things in mind. Is there anything else you can think of on mortgage insurance that we didn't cover?
Well, only that it's not. We're not saying that it's bad or great. We're just saying know what it is, right?
Right.
It in certain situations.
That's the strategic money tip, is to know what that mail that's coming to you, know how to look at that and decipher through it. And if you're not sure, you can always call us. I mean, that's the easy one.
Right. Because we'll be able to help you with term insurance. Now, if you wanted some of that decreasing kind of, for some reason that's what you preferred, then you probably have to go somewhere else for that. I'm not sure if we have any carriers.
No, we don't have that. Most of those are not. That's a very specific niche. Most people, it's not what we recommend. Not because we don't carry it, just because I don't want to pay premium on $250,000 or $500,000. If it's a $500,000 home, and I owe $200,000 left, I'm not going to get the full $500,000 benefit, but I have sure paid for it as if it were. So that's why I don't like it personally. Is I'm paying for something that I'm not necessarily getting the full benefit, nor is my family getting the full benefit.
Exactly. So know that, read the fine print. Even though the envelope may say the lender's name, it's not always from the lender.
Correct.
Okay, so just know that if it has insurance on there, and what they usually do is it's a response card. In order for somebody to call you or contact you, you have to send it back. So if you're not interested, I did this morning with 3.
Wow.
Just tore it up and threw it away.
Got 3 of those?
3 of them. 3 of them.
Wow.
I just went through, and every one of them was a little different, but every one of them had my lender's name on it.
Okay, well, that's interesting to know. So that's a strategic money tip. As always, if you get something like that in the mail and you're not sure, many of you have taken advantage of that, is call us or email us and say, hey, I got this in the mail. Do I need to do anything with it? And if we'll tell you to keep it or act on it or explore it or file 13 it, which means throw it away. So that's the strategic money tip for today. Hopefully you have found this helpful. If you got any questions, again, call us 1-800-381-8870 with Strategic Estate Planning Services. God bless you.
Bye-bye.